So let me just walk through where we are in terms of the digital lending ecosystem, especially as it is relevant for MSMEs. I think and I'll start from the customer end. The origination and customer experience elements are by and large getting solved, right? And actually, the last 12 to 15 months have been significant enablers there, because there has been a change in the customer behavior as far as adoption of digital technologies are concerned. So, for example, pre-COVID, of all the loans that we did, about 30-35% of the loans would be electronically signed. Today, we are hitting close to 90% on customers' willingness to sign a loan document electronically. Similarly, the electronic ACH debit mandate was 10 to 12%. Today, we are crossing 50% on that, right? So customers are clearly saying that digital lending or borrowing from their standpoint is the more convenient preferred mode of accessing credit for them. And they are happy to adopt technologies that allow them to do that in a convenient and quick manner. There is also been an emergence of a lot of digital ecosystems that are facilitating this process. So, one of the speakers earlier mentioned about formalization of MSMEs. The reality of our times is that formalization of MSMEs is not led by GST or taxation, right? It is led by a small merchant getting on top of Amazon or Flipkart platform and saying, I want to start selling. And when people conduct their business activity, formalization happens naturally, right? Their data starts to get captured. The validity of that data, GST, right, becomes an entry point from there, because they start selling on these marketplaces much before they have to, be compliant with the GST framework. So the front end pieces are working well. The second key element of any lending business is the credit engines, right? And back of the data that is available now, there are multiple companies, I would reckon at least about 10 to 12 companies, that have demonstrated that fully digital decision-making in MSME credit is effective. So if you go and view, all loans done in the market through a bureau scrub, for example, you will notice that incrementally more people are being brought into the fold of formal credit through fintech lenders than through banks and NBFCs already, right? So from the new to credit customer base, that is the biggest contributor. If you look at loans below 1 lakh, you will again see the same trend, that fintech platforms and fintech NBFCs are the ones who are driving that low ticket size, because the operating cost can be controlled, right? But at the same time, credit risk is being controlled there. So that big problem will never be completely solved, but has been significantly solved and continues to be solved. Now, where that leaves us is the constraints on the supply side. And that is really what this industry is struggling with as far as scale is concerned. Two big categories. First category is data. Now, there is a bunch of data that is actually within the realm of public ownership, right? Whether that is GST data, there is the account aggregator system, which still has to become mainstream. There is a long pending ask for figuring out easy way to do KYC actually for MSMEs. While that has been streamlined for individuals, MSME KYC is still a relatively complex zone to tread. So the data assets is one piece where there is need to expedite what is going on. And individual fintech companies can't do much about that, right? Because that data is either sitting in the public realm, it will sit on top of a public platform, or has regulatory constraints to how KYC can be done and things of that nature. The second big constraint on the supply side is the capital. So just as Deepak ji mentioned, it hurts us when a business owner has to take loan at 36%. But the reality of why that 36% lands up there is NBFCs, which are regulated entities, are borrowing at 15%. Now that should hurt us even more when the RBI banking rate is at 4%, 5%. right? The fact that wholesale capital commands an arbitrage of 10% is unprecedented globally. So now we have to solve for that problem, because without that, the pricing to the end user will not come down. Right? Similarly, there are credit guarantee schemes that have come up. Now, very enthusiastically, most of the fintech lenders had subscribed to a credit guarantee scheme in March of 2020. Today, there is a risk of default on the credit guarantee scheme. So introducing new credit guarantee schemes is not helpful. Credit guarantee schemes have to be served, right? And that is when they build credibility. That is when it becomes an engine which can then run on its own. So I think there is concerted effort that is required to solve the supply side constraints. And in my view, those are the only things that are remaining now. If you ask me 5 years back, I would say customer adoption is a big issue, right? Today, that has been taken care of. Customers are voting with their applications that they want to get on digital platforms, whether that's an Indify, whether that is a ESB 59. All of us have seen literally millions of customers, SME customers, come to us and say, I'm willing to adopt a digital mechanism. So those would be, some of my core suggestions and submissions.